Maggie Lake, and today I'm talking markets with Harry Melandri, Senior Advisor to Arque Advisors and author of the Respice Finem Substack. I think I said that right. Hi, Harry.
I think so, but who speaks Latin these days?
Nobody. Who's going to check me? No,
Exactly.
actually, knowing us, there's somebody
Yes, that's
listening in the
right.
chat who's
That's right. That's
fluent
right.
in Latin.
That's right.
It's great to see you.
It's very good to see you, Maggie. How are you?
Oh my gosh. Wow. What a week. I mean, we keep saying that, and then it kind of continues. So we had stocks that were in the green, looked like it was recovering, pretty calm Friday. Then the White House announced that contrary to earlier reports that were circulating, they'd be putting 25% tariffs on Mexico and Canada and 10% on China starting tomorrow when we are speaking right now, Saturday, February 1st.
Yeah.
Hard to know whether to take this seriously or at face value, or if it's a negotiating tactic, how much will change. So there are reports he's speaking with NVIDIA CEO right now. You can just imagine there's going to be a lot of conversations. So I'll put that caveat in there. But Dow, S&P, NASDAQ all moved into the red. Bond yields, dollar edged up. Investors were seen a little bit surprised by this. There's still a lot that we don't know, and that's going to play out. But what's your reaction to this?
So among the people I talk to, and of course we're all prisoners of our social circle, and I thought this was always odds on. This is what he said he would do. People who talk to Besant had a pretty clear idea of the rationale, why this is appropriate. None of it, there are people on both sides of the aisle who think this is the appropriate way to organize things. If you remember Jake Sullivan's industrial policy, which was, he introduced in a Brookings Institute talk. Well, I can see the rationale for that too. The United States is not in a position to be autarkic in key global trade items, strategic items. Military supplies are one of them. So it's an anomalous situation if your main supplier or a significant supplier to the Pentagon is mainland China. If you have issues about arm wrestling with them, you don't want them to be your main supplier. And this process of offshoring has probably gone too far, and you see evidence that US workers have suffered. You see evidence that the United States has created a political coalition between these disenfranchised workers and tech oligarchs. Weird, but that seems to be what happened in the Trump election. Some part of it was inflation. Well, for good or ill, this is where we're going. But, people often characterize Trump's actions as illogical or incoherent, and I take issue with that. The way he sells stuff sounds a little rough, and it's aimed at his base. But you can discern the strategic briefing behind what Trump says. You can even discern the advantage to him. So that nonsense, or what was taken as nonsense about Greenland, Canada, and the Panama Canal, if you had Pippa Malmgren on, she would have talked about these issues of strategic competition in the Arctic and the need to, obtain a better strategic position for the United States 5 years ago. This is another front we can open with the Russian Federation. There are resources in the Arctic that are critical, and there'll be shipping lanes that are critical. And Russia currently claims all sorts of rights that, countries might want to contest. Canada is not in a great position to contest that. So I think I can see the outlines of Trump's strategic briefing. He just happens to present it in a way which doesn't play well with allies, probably because he don't care.
Yeah. And that's the bottom line. But it's a good point. I mean, listen, all of this is an exercise of paying attention to what's important and trying to cut through the noise. And some of the noise is, like you said, in the delivery or in the, the nature of the press conferences. So it sounds like I heard someone say something, it's the sort of national securitization of everything right now, because, that theme, it's a kind of the backbone of America First, I suppose. A lot of it is based on national security concerns. If that's the case, is there, I think where people get concerned, and maybe in the investment community has the price of that, is there a price, and has the price of that also been communicated in real time? If we're going to pursue this and take this tack, there certainly it will come at a cost. And what is that cost? And have we all gotten on board with that?
So you are very right to highlight the fact that there are costs associated with this policy. And we know this from the 1980s when we decided to get rid of industrial policy and we went with the market as an all-seeing, all-knowing, efficient allocator. Well done, Mr. Hayek. And of course there are costs. When you're trying to reshore semiconductors, I'm not sure Taiwan Semiconductor is 100% on board with that. And you might have to induce them to do it. You may have to pay significant subsidies to reshore that industry. But if you don't reshore it, you don't have security of supply of a key component. So yeah, there are costs, and there are costs. You'll see those costs in the federal budget. The thing that bothers me, and I said we should discuss, and we're immediately going off topic because it's me, right? I always go off topic.
And we count on that. You're paying attention to things we're not. We need to know what you're going off topic on.
But I wanted to talk about monetary policy and the fact that the piece I wrote is titled "The Adults Are Talking," because I've been listening to the Strokes a lot. And that's
we always like a good music reference.
I like a good music reference for sure. And a lot of people don't read Federal Reserve System papers. And there's a reason for that, because they're just not a good read, right? It's not as entertaining as HBO. But if you were to read those papers, you'd see an emerging dialogue, which is very different from the discussion of how we addressed monetary policy through the 90s and the noughties and beyond, even the 80s. And we kind of have this notion of Fed independence, but it's an illusion. It doesn't make any sense, because we're starting to see that inflation itself is intimately connected to fiscal policy. So if the Fed's independent and fiscal policy, the fiscal policy of the Congress is not consistent with the Fed's monetary policy, you are going to get some very nasty side effects. Say monetary policy is too loose. Sorry, fiscal policy is too loose. The monetary policy that might be consistent with price stability could involve exceptionally high rates. And that's without even considering other parts of the dialogue, which is discussing whether R star is determined by the international supply of savings.
Okay, well, I'm going to stop you because we might lose people. So let me just break this down and see if I'm following along with you, because we were just talking about tariffs. So let me just start with, if they were to move forward, and it's a big if, everyone, if they were to move forward, is that inflationary?
So first of all, I don't think it is a big if. Those tariffs in some form are coming, and it's core to the discussions I've come across. I mean, I'm not privy to anything. I don't talk directly, but I talk to people who talk to people. And there'll be some kind of tariff structure put in place. The question is, does it look at or does it respect things like alliances? Does it look at wider relationships? Does it care about the inflationary consequences or the supply chain consequences? And how many exceptions will there be? And to some degree, if you have tech bros in place, don't be shocked if the mantra is move fast and break things.
So do you expect to see an inflationary impact from that if they're moving fast?
I think there's inevitably going to be some kind of inflationary impact. Some of the discussion is about how big that impact is and how long it lasts for.
Right.
So they'll inevitably, and you could choose, but this is the thing, the Fed could choose to look through it. The Fed could say this is a temporary phenomenon. It really depends on their sensitivity to this. But there are other things in the pipeline as well. So one of the things being discussed, and it's a big deal, probably a bigger deal even than tariffs, which I think, if you're going to onshore, you are always thinking that you might have to use tariffs to do that. Carrots and stick, if you will, to make that onshoring process happen. But what about the stance of fiscal policy? Where are we? And, I'm hearing discussions that suggest we might be looking at a 2.5 trillion tightening of the budget. Well, 2.5 trillion isn't a trivial amount of tightening. And, we have you and I have this jousting about whether or not interest rates a significant factor in stimulating the economy and what happens when debt levels are high, absolute public debt levels are high, and interest rates get raised. Well, the arithmetic effect is that you get now debt service is $1 trillion a year. So it's second to military spending. It's not the biggest budget item because Social Security is a bigger budget item, but it's a big one. And you have even Senator Daines has spotted this. I shouldn't say even. But yeah, debt service is a significant element in budget. So you might need to move this thing forward, you might need a bit of cooperation between the monetary and the fiscal authorities. And frankly, if you look at the papers flashing backwards and forwards, the Richmond Fed, the St. Louis Fed, the Chicago Fed, they recognize this, that really the Fed's ability to control inflation is limited. The real driver of inflation at a certain point is the deficit. And there's an old-fashioned, it's a modernized version of Ricardian equivalence, a neo-Ricardian equivalence. And now I'm getting really wonky, right? This is a bit, I get excited, everyone else gets bored. And this neo-Ricardian equivalent idea is that, I think the term for it is the fiscal theory of the price level. So you will see people like John Cochrane referencing this. Actually, Woodford at Princeton was talking about it in 2000. This being out there, we know that monetary policy and fiscal policy, the idea that they're separate, is silly. It's never really been true. The idea of central bank independence doesn't really make any sense.
Right, because it makes sense because they're, they don't control all the levers, right? I mean, if inflation is a product really of fiscal, then how could they, just go on their own? So let me ask you a question. So in the real moment now, are you saying that if they were completely independent, we are in inflationary times and they would be raising rates, but because of the high deficit and depending on what happens on the fiscal side, they will not be able to do that because it would cause too much financial pain? Am I on the right track?
So these things always go through the prism of politics. And if you, Bill Martin, William McKesney Martin in the 70s once said that the Fed is independent within government, but not independent of government. And the point about McKesney Martin is he was appointed by a president who didn't like the fact that they had constraints on them and wanted those constraints relaxed. And basically, if he didn't have a compliant Fed chief, he was going to get one. Well, we're in a similar situation today. And right now, Jay Powell has stated he's independent and that you'll have to drag him kicking and screaming out of that office. But think about it. You have a situation where the White House and the Fed are at war. This is not going to be great for the currency. It's not going to be great for the markets. It's not going to be great for the banking system. And frankly, an ambitious senior Fed official, let's say Chris Waller, just float that name out there for a reason. Not that Waller has ever said that he wants a top job, but I saw him deadlift for over 300 pounds. People deadlifting over 300 pounds on Twitter are probably not interested in retiring.
I love that. I love that signal. That's amazing. First of all, obviously you have read all these Fed papers, being the ex-central bank.
Being a very tedious man to talk to it.
No, your history starting out in central bank land is poking through. But thank you for doing it so the rest of us didn't have to. It's why we love talking to you, Harry. So let me ask you about fiscal spending so we can sort of understand how this is going to play out and what you see happening. So do you expect them to be able to cut the budget enough to be able to bring down the deficit, to have some fiscal constraint, or are they going to spend like every other Congress and president, in modern times has done? There does not seem to be appetite for cutting in DC. Is this time different?
A friend of mine tells me about iron laws of politics, which is my re-election. The first law, I think, is my re-election. Re-election matters more than anything else. A second law is something like a problem is worth more than a solution. And I think the third law is everything should be delayed until the last possible minute because of the second law. It's going to be incredibly difficult to make those budget cuts. But what I understand from friends of mine who follow this is that there's a lot of congressional critters on both sides of the aisle, but particularly the Republican aisle, that felt that they were hoodwinked over COVID. So the COVID fiscal packages were intentionally designed to be easy to access. That meant they pretty much had as a feature that they were open to enormous fraud. And you saw something that I would describe as looting in any other context taking place in the federal budget. I think that introduces a measure of distaste in Congress about the degree of government spending. And people who are ideologically opposed to government spending are going to find it very easy to try and push spending cuts. That said, every time a spending cut affects your state or your district, your seat is at threat. So ultimately, no, I don't think it is going to be easy. But right now, a lot of people are pushing it, and this is early in the administration's term. If you're going to have pain, this is when you want the pain.
Yeah. So I have one name for that, Paul Ryan. You saw what happened to him when he tried to get really wonky and really get tough on cutting deficits. He was run right out of politics, and a lot of people liked him. But it's very tough. It's a tough town to talk about cutting spending in anything other than theory.
It's exactly. Now, if the Fed were to stand in the way of a government that has a particular strategy, and frankly, I don't believe deficit reduction can happen personally, but I do know a lot of people at the Fed, economists at the Fed, people who care about the US are very worried about this because unsustainable, Stein's law about unsustainable things?
I don't know. No, I don't think I do. Not right now. If you tell me, I might remember.
Yeah, they stop. Something which is unsustainable. I love that law because it's simple and it's obviously true. So if something is not sustainable, it will stop. But in the case of very large deficits, they usually, the solution is something like hyperinflation. So it's often the solution is pretty damn ugly, and it often costs a lot of voters more to have it. Inflation is a pretty pernicious thing for voters too. And this is classical reference time. Sorry, kids. A Scylla and Charybdis kind of moment. Everyone's damned if they do and damned if they don't. So I do think we're going to see an effort to cut that deficit. I tell my kids not to touch hot stoves and hot things. They don't listen to me. They figure it out themselves the hard way. I suspect that's what's going to happen. And as a result, I'm starting to think that there's a chance. I think there's a really solid chance that rates could surprise to the downside.
Because they have to.
Well, the alternative, the weak spot in the US is the leveraged balance sheets, the financial system. So it's ironic in a way that the Fed is the one like pushing to hold rates higher than perhaps they might otherwise hold them in an attempt to address inflation. Rates are a very weak tool for addressing inflation. They operate through creating insolvency in the financial sector and through wealth effects. Well, okay, if you have a deficit shrinking, you probably have negative wealth effects anyway. I think ultimately I don't want to make some ridiculously aggressive comment about this is what the Fed's going to do. They're going to definitely do this for this reason. All these things work at the margin, the marginal decision. So this is biasing the marginal decision to lower rates. So if the Fed, we know the Fed thinks that neutral rates are a little bit lower than here, but they want to give themselves a little political breathing room to cut rates should it be necessary. And if you cut rates too early, then the White House will push you to cut more rates. So you hold back and wait a little bit to see what happens on tariffs, to see what happens on fiscal, and try and deliver, at that optimal time. My suspicion is you should perhaps consider the downside on rates and think that that could be a little bit more extensive than you think, not just because they might accidentally do a little bit more tightening on fiscal policy than you might have thought, but also because as they cut rates, thinking that it's an accelerator, given high levels of debt, maybe Mr. Mosley's right, and maybe that's the brake they're tapping. So those two effects combining, don't be shocked if we get a lot more rate cuts than we're currently pricing.
I want to ask you something else about that. And I want to know what you think the impact in the bond market. But I wanted to say hi. There's a hilarious chat happening. Hi to everybody in the chat. Happy Friday. You made it. Very, very interesting conversation going on about what everybody's teed up for the weekend in terms of drinking. Christopher, I did not know you went to bartending school. And I have certainly not had that drink that you're talking about. I just saw coffee grinds. I don't even know what. But I will say that my new favorite is a White Cosmo. Don't judge me, but it is delicious. I highly recommend you try to make one if you have not had one on the weekend. It's like maybe that's how we're getting away from being too retro and doing a regular two Sex in the City with a regular Cosmo. But that's my prediction. You're going to see more on the menu. It's
I'm
popping
not
up.
A believer in artificial stimulants like alcohol, Maggie. I much prefer hard drugs like heroin myself. So.
You just go right to the extreme, huh, Harry?
Perhaps
he's joking. If you don't know Harry and his sense of humor, he's joking. So we have a couple of questions. But I just want to, if you think that the Fed is going to lower rates, do you think the bond market will respond, or do you think that sniffing out that, or looking at the potential for inflation and all of these other things, that the bond market, that sort of bond market vigilante will come back and bond yields will be problematic no matter what the Fed does?
So if you read all these tedious papers that I'd read about our star, you would suspect that the long end of the curve is not going to be particularly easy to corral from the Fed. So much of the rationale for me thinking the Fed cuts rates is because I think the long end of the curve is not particularly happy, that global savings are not really available for it, and that all of these big global powers want to try and control their own savings flows and keep them at home rather than lend them to the United States. And the United States has benefited enormously from capital inflows from the whole world. And conversely, the rest of the world has suffered enormously from giving its capital to the United States. China, I'd noticed, has got a program of issuing increasing amounts of debt. And that's designed specifically to try and pull more of their savings, to keep more of their savings within the Chinese market. That's true for Japan as well. When the Japanese are raising rates, it tells you that Japanese policy is to try and reverse the export of capital, which made a lot of sense when you have an aging population, but makes a lot less sense when you're trying to onshore productive capacity from China back into Japan. So I think we're in an environment where long rates may not come down very much, even if the Fed cuts. And what a Fed cut would actually do is it would help banks and other levered players make money, and it would support the price of assets by kind of steepening up the curve and creating more carry, which would kind of reduce the extent to which long yields would otherwise go even higher. And I think we've got enough headwinds in real estate and other places that a banking supervision focused Fed probably wouldn't want it. And by the way, and immediately starts pointing up, by the way, you see this in terms of BIS, Basel capital adequacy regulations, and the fact that the United States is not adopting the new rules. There's a lot of talk that leverage ratios, supplementary leverage ratios, might be relaxed rather than tightened. And to my mind, that is telling you it's another symptom of this shortage of global capital, and that we may need banks to pick up the slack. We don't need it right now, but going down the line, if we want these deficits to be financed, we probably don't want to make it harder for banks to hold government debt. So I see all of this as a package designed to make a Trump policy mix work. Because if you've got a hostile Fed keeping rates a little bit higher than they need to be, it'll make life very difficult for this administration and make the kind of deficit spending reductions very painful. So.
Is there, what is the I want to hear where you see opportunity, because I know you're always looking in places where people aren't. But what is the risk here? Where's the greatest risk? Is it to equities? Is it to bonds? Where do you see? Because this is a very tricky situation you're talking about.
So equities have been the kind of place to be. Global equities, for global equities, the place to be has been US equities. It's a massive outperformer. And to be fair, there's a sense in which that makes sense. And like, we think about the implication of tariffs for international capital flows. If you're a German company and you want access to the US market, you have to relocate your productive capacity. Some part of it has to be relocated into the United States. So we will see a temporary flow until the rest of the world adjusts and tries to fight back, of capital into the US, further pushing US equity markets higher. Now, there comes a point where that tips over. So if we go into a heavy recession with advanced valuations, boy, that could be quite nasty. And that's probably the thing that, like, no matter what the Fed does to the front end of the curve, if the back end is going to perform, the only real way it can perform is if we go into an ugly recession. At which point it's really a flight to safety that trade that's making that happen. Mm. So I don't see this as an imminent trade, but I see what you've really got here is a deficit which is way too big, which is completely unsustainable over a medium to longer term horizon, and which does have to be addressed, but nobody really has an incentive to address it. They will make an attempt to address it, but the fiscal theory at the price level would say that where the deficit is unfinanceable domestically, the difference in the longer term in the budget, government constraint will come from inflation. And that means, I would suggest, that over the longer term, taking a medium to longer term horizon of 5 to 10 years, we're going to be surprised by how much inflation we get, unless we can address that deficit thing. Personally, I don't think we can. If you look at it, there are new priorities. The priorities of defense spending, strategic competition in areas like AI, as you pointed out earlier, semiconductors, things like that, quantum computing, clean energy. Those are all pretty pricey items, right? Unless, of course, you're deep seek, and then you can do it for $4 and a packet of potato chips.
Supposedly.
Right.
So that is going to be problematic, because you have a situation where voters are voting people into office who will address inflation. This is the issue with not understanding the costs of some of these policies.
Right.
So that's it. That makes it
none of it may work exactly.
Yeah.
But I think to even give it a chance of working, and to stop your financial system from tipping over in the process, you will need a Fed that's slightly more accommodative than we understand.
Where do you see opportunity, Harry, in this very uncertain universe?
Well, to my mind, we're going to be shocked by rates being turning out to be lower than we expected, that we get rate cuts when we didn't expect rate cuts. So you could see some opportunity in bonds. I was and so stupid that I actually bought Argentinian bonds 3 years ago on the grounds that it's okay, them being insolvent doesn't matter. And that one's worked well. I still think the emerging debt markets are not bad. Although, like, the Argentinian bonds are starting to trade like they're real bonds. Weird, right? So maybe that most of that's in the price, and it's, but there are lots of places that are in distress because of the sucking out of US capital markets sucking in global capital. That meant that weaker credits like the emerging markets just couldn't attract capital on good terms. So you're seeing those restructurings work out. They've worked. I think a lot of things, actually, there is a good point. So I did some work for Julian on military spending. And one of the conclusions they came to, and God knows how I managed to dig this up, but I did. One of the conclusions they came to was AI was a critical component of the future of warfare, and kill chains are going to be accelerated enormously. And the way to do that is with AI pattern recognition. So you get a camera looking at something in a forest, and the AI is going to be a better system for spotting a tank hidden in a forest than any human could do it. And the speed of that kill chain will be massively advanced because it will be all computerized. And that's kind of what the Ukrainian war has told us. And that meant that people like Palantir would be huge beneficiaries because they're well connected, because that's what they're meant to do for a living, and they have access to the data. And then I put that trade on, and I made 20%. And then, of course, it went up by a factor of 3. So there's more of that to come. We're going to have autonomous warfare. There's a lot of money going into that space. There'll be a lot of money going into clean energy. There'll be a lot of money going into re-onshoring all sorts of capacities, which are currently living in China. We need those back onshore. And they will be incentivized to do that.
I'm doing an event at Palantir Foundation in February. I'm really interested to hear what everyone has to say about that. I'll report back to you all.
For me, the whole thing is absolutely terrifying because, I prefer to be killed by a person than a machine. But that's just me.
Than a drone at your
right.
outside your window.
Right.
Yeah, I mean, we're joking, gallows humor, but these are very, very serious things we're talking about. Fantastic stuff, Harry. Can't wait to read the piece on Substack. Harry's on Substack, which we're so excited about. He's going to start posting.
It's funny. Going. I really did my best to make this shift in Fed communication funny. But I found it hard work.
Oh, well, putting humor into Fed spew. How shocking that even for you, Harry, that's a tough one.
It turns out the fiscal theory of the price level is not as funny as you might think. Weird.
Hey, what's you want to give us the translation for the name of your Substack?
Consider the end. So I actually wrote up one post which has disappeared. I don't know how, explaining that, but. It's also consider the end is considered a memento mori, so reminding us we're all going to die, except for me, of course. I'm
just to cheer you up on your way into the weekend, of course.
Right, but I was thinking about it as in a macro context. So where does a macro idea lead? And let's consider the end game for macro ideas, not the process. So that's part of it. And the other part of it is it's also the motto of Homerton College, Cambridge, which back when I was a kid was a teacher training college and turned out to be the best place to go looking for ladies to hang out with. So that's got that going for it.
Well, and that's enough. Great stuff. Well, we're looking forward to it, Harry, because you really do sort of think about things and dive into these papers that most of us mere mortals do not. So we always appreciate when you bring it.
That's right. I'm boring so that you don't have to be.
Maybe that should be your submast. Great stuff. Well, listen. Wait, just let me ask you. I have no idea. This is probably better put to a tax person, Jonas. But are we going to see taxes on those capital flows to the U.S. in response to a tariff on goods?
No, we won't. But it's the inverse of tariffs is a restriction of trade and also a restriction of the desire to park capital in those markets. So just the process of putting tariffs up must imply, like the idea of tariffs is reducing trade deficits. Reducing trade deficits must be reducing capital flows into the country as well. It's kind of goes about. Now, I say that's a longer term phenomena. The short term effect could be perversely the other way around. As you're a German company, you produce in Germany and export to the US and they tariff you. Why wouldn't you move your production into the US? And so the short-term effect of that might well be perversely to actually encourage capital flows further into the US, because if you want to sell in this market, you have to be located in this market.
There you go. Of course, Jonas, I should have known that Harry would have an answer to that question. Crazy me for thinking that it was too political, but thank you for that. Thank you, everyone in the chat. I hope that you all enjoy the beverages you've been talking about and you have a great weekend. It has been a really, really busy week, and it's going to be the same on the weekend because we're going to get a lot of a lot of noise as well as news around the tariffs. So just keep your head about you. Harry, have a fantastic weekend.
You too, Maggie. Enjoy.
Look for Harry's Substack. We'll put a link in ours. You can follow and subscribe to us on Substack as well. And if you haven't subscribed and you're listening to this on YouTube, please do so. And you can find us on Apple Podcasts now. So we're everywhere. So come join the community. Thanks, everybody. Have a great one. Take care and good luck out there.